Imagine finding a strange string of letters tucked away in a tangle of technical listings, while refreshing a huge financial clearing website that is full of acronyms, codes, settlement identifiers, and esoteric institutional references. In today's hypothetical situation, that enigmatic code serves as the impetus for a widely accepted idea. What if an XRP ETF filing was indeed the source of this weird DTCC identifier? This fictional moment initiates our deep dive into one of the most explosive what-if possibilities in the XRP community, despite the fact that such a relationship isn't based in reality. This discovery is presented in the story as a startling revelation, the kind of exclusive that instantly generates excitement on the internet. Even as we make it clear that nothing we're going to talk about is fact-based reporting, but rather pure fiction, written for amusement and instruction. The script depicts an alternate scenario in which BlackRock, the biggest asset management in the world, files a groundbreaking XRP spot ETF, shocking the financial industry and sparking intense interest as the dramatic introduction fades. In this made-up world, newsrooms are buzzing with urgent bulletins, social media is ablaze with debates, and analysts are racing to understand the decision, speculating on what it might imply for institutional investors, liquidity, and market structure. Viewers are led through the psychological thrill of envisioning such a momentous news, contrasting it with the excitement around plans for Bitcoin and Ethereum ETFs, and considering the possible knock-on implications on the whole cryptocurrency scene. Using this narrative technique, we investigate the true mechanisms of ETF filings, the regulatory processes, and the reasons behind the speculative interest in particular digital assets from Wall Street and Main Street. The tone is still cinematic, but the educational undertone reveals the intricacy and complexity of these financial breakthroughs by assisting the viewer in comprehending the actual mechanisms behind ETF approvals, clearing procedures, and institutional custody regimes. The second layer of the fictional story is then introduced in the script. A Larry Fink footage that has been digitally changed or produced by AI starts making the rounds online, and people in the community take it as evidence of the enormous institutional support for XRP. We talk about the phenomenon of deepfakes, how they are made, why they spread, and the significance of confirming sources without referencing any real people or deceptive video. In this fictitious situation, the video becomes a part of the internet folklore, generating discussion threads, reaction videos, and disputes. The cultural dynamics of online finance communities, the formation of narratives, the evolution of rumors, and the potency of storytelling in influencing market sentiment, even when it lacks factual support, all captivate viewers. The narrative then delves into the great institutional domino idea, wherein Vanguard, Fidelity, and State Street are shown as waiting in line to file their own XRP ETFs in an attempt to gain early supremacy in this speculative environment. This serves as a basis for discussing the mechanisms of institutional competition, the reasons behind the introduction of comparable products by asset managers, and the criteria that define the viability of an exchange-traded fund, ETF. The fictitious scenario enables viewers to examine the workings of fund creation, liquidity provisioning, custodial logistics, and the operational complexity involved in introducing new financial products, even though none of these items actually exist. The fundamental goal is to entertain and educate, yet the tone is still intense and tense. So let's dissect the so-called domino effect idea as we enter the middle chapters of this tale. This is essentially the notion that, in this hypothetical situation, the approval of a single XRP ETF might trigger a complete market-wide chain reaction. Some theories prefer to refer to it as a liquidity supercycle. Retail traders envision a large short squeeze, massive institutional inflows, and a surge of global capital pouring into blockchain-based payment networks in this hypothetical scenario. The film explores how short squeezes truly operate, what motivates institutional behavior, and why those tales of limitless liquidity typically oversimplify the actual dynamics of supply, demand, and market making. The script enables you to learn a little while taking in all the high-stakes drama by considering these crazy predictions as a sort of narrative rather than genuine statements. As the video approaches its finale, it depicts a really vibrant universe in which community experts are creating price forecasts that beyond $1,000, all based on, well, creative models of institutional inflows that are expected to surpass even those of Bitcoin. This is where we go a little farther into valuation theory, looking at not only the fundamentals but also the practical difficulties that analysts deal with on a daily basis. We'll examine how genuine analysts approach pricing modeling, taking into account both data-driven techniques and the human factor that influences each choice. We'll dissect the elements that actually influence asset appreciation, including market mood, economic data, and even world events. In all honesty, why do speculative figures always appear to soar during those hype cycles, grabbing everyone's attention and stimulating irrational speculation about the entire hypothetical 1,000+ target? In a sense, it gives us a means of discussing the distinction between excited projections and those that are based on sound financial research. In these situations, we'll see how meticulous investigation and critical thinking may distinguish fact from fiction. In essence, the novel used this type of exaggerated scenario to draw attention to the difference between fact and fiction, encouraging you to question market narratives and audacious promises, while simultaneously allowing you to relish the exhilaration of what-if speculation and the thrill it offers to investment. We kind of take a step back in the last act, lowering the tempo and easing everyone out of that intense plotline into a more contemplative ending. We pause to consider the reasons for the attraction of such storylines to digital asset communities. Sincerely, they stand for curiosity, hope, change, and the intense yearning to witness the future blossom in daring, innovative ways. Here we want to emphasize how important it is to critically assess information, validate claims, and comprehend the emotional factors that influence a lot of our online financial discussions. All of that anticipation turns into genuine understanding when the story's explosive intensity changes to something a little more grounded. As a result, the video ends with a message of empowerment and responsibility that inspires you to maintain your curiosity and think critically. The storyline for today was only a cinematic examination of what the world may look like if a series of remarkable, improbable occurrences occurred simultaneously, creating a striking image of what might be. Price forecasts, domino consequences, and ETF filings are all untrue and unconfirmed. They are all a part of this framework for speculative storytelling, which is designed to pique your curiosity and provoke thought. Created to assist you in comprehending the thrills and, yes, the dangers of financial hype cycles. Together, let's ponder as the music increases. You are welcome to participate in the discussion. What would institutional adoption actually look like in the dynamic environment of today? What methods can assist investors cut through the clutter when it comes to online information? And what subjects should we as a community investigate in the future? The dramatic tone remains, captivating and creator-friendly, providing a long-form experience that enthralls, motivates, and educates without deceiving. Please keep in mind that I do not hold a financial advisor license. These videos are published for the sole purpose of providing entertainment. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. Additionally, to be the first to know when I post new stuff, make sure you enable the alerts. I can't wait to see you again in the next video. Well, be careful.